Are you planning to invest but still confused about what to choose between cryptocurrency and stocks? Do you want to know the ins and outs of the most popular investment options? Learn about investing in crypto over stocks in a way that may help you decide whether adding the cryptocurrency to your portfolio is the right move for your situation. Here, in today's video, we'll discuss why you should trade crypto instead of stocks. But before we get into it, do me a favor and smash the like, subscribe to the channel, and hit the bell button for notifications whenever a new video is published. What is stock market? Stock markets are considered public markets where the issuing, purchasing, and selling of stocks happen. Stocks, commonly known as equities, are the representation of part of your ownership in a company. Likewise, the stock market is a place where stockholders can buy and sell their assets. To consider a stock market as efficiently functioning, it must be critical to the economic development. It can create opportunities and give companies the ability to access quickly and gain capital from the public. Purpose of stock market. According to some analysts, the stock market serves two very important purposes. The first purpose is to provide capital to companies that companies can use to fund and upgrade their businesses. For example, suppose a company contributes 1 million shares of stock that initially sell for $10 per share. In that case, that will be equivalent to $10 million of capital that can be used to expand its business, deducting whatever fees the company had paid for an investment bank to manage the stock offering. Moreover, instead of offering stock shares, instead of borrowing the capital needed for expansion, the company avoids incurring a considerable debt and paying for its interest charges. The secondary purpose that the stock market serves is giving investors, specifically those who purchase stocks, the opportunity to share in the profits of publicly traded firms. There are two possible ways that investors could profit from buying stocks. First, by paying the required dividend in a share of stock, and another is by selling their stocks to possible clients if the stock price increases from their purchase price. For example, if an investor purchased the shares of a specific company's stock at $10 per share and the stock price subsequently rises to $15, the investor can then gain a 50% profit on their investment by selling their shares. What is cryptocurrency? Cryptocurrencies are virtual systems that feature secure payments online, denominated in terms of virtual currencies called tokens, and are represented by ledger entries internal to the system. Crypto is the term that refers to the various encryption algorithms and crypto system features used to protect and secure entries such as elliptical curve encryption or simply the creation of secret keys. Only the private key holders can unlock them. The larger the key size, the larger the curve, and the more challenging the problem is to solve in terms of key sizes. Public and private key pairs are also included when talking about cryptocurrencies. Public key pairs are used to encrypt messages, while private key pairs are used to decrypt messages. Cryptocurrencies also involve the hashing functions that protect the data being stored in the cloud. Take note that cryptocurrencies work using a technology called blockchain. Blockchain is a decentralized technology. It has a dispersed function that is spread across many computers that manage and record transactions. Key reasons why you should trade crypto instead of stocks. First, cryptocurrency is owned by everyone. Cryptocurrency's function is similar to any traditional national currency globally with a few fundamental differences. There's a currently known fiat currency created and regulated by a governmental body, all of which now represent the so-called debt. Anyone that owns a country's currency holds an IOU, or the abbreviated phrase IOU, that represents an informal document that acknowledges the debt you made issued by that respective country. On the other hand, cryptocurrency does not stand for debt. Its value is likely determined by the extent of how and what someone is willing to trade for it. The fact that cryptocurrency has dispersed functions plays an essential role in determining its value. With that being said, nobody owns or regulates a cryptocurrency. Its value is not subject to a country's political party or a central bank's monetary policy. However, cryptocurrency's lack of centralization may be viewed as a method to avoid taxes. Conversely, like stocks and bonds, cryptocurrency is considered an asset. For instance, in the United States, cryptocurrencies are subject to capital from a sale or exchange. Those currencies operating through a centralized ledger, a sole entity that manages the transaction records like in the national central banks, are exposed to human manipulation and corruption. Since cryptocurrencies are decentralized, it operates on a distributed ledger or a shared transaction list. This type of ledger is the main advantage of a cryptocurrency over stock markets, which would lead us to our next reason why it's worth the attention. Second, Cryptocurrency is almost impossible to fabricate. Since I already mentioned that cryptocurrency operates on a blockchain, understanding blockchain technology would help you understand why this is the key to the power of the digital currency in the future. The block in cryptocurrency is composed of a small amount of encrypted data. The chain is the public database in which the blocks are relatively stored and chronologically related to each other. Every block stored in the blockchain has the specific and unique code that makes it easy to recognize itself from all other blocks in existence, called a hash. When someone wants to add blocks of information, it's added to a blockchain in chronological order. When a block is added directly after the last block created, automatically the block added would have its unique hash. The ledger or database of blocks in the chain is simultaneously distributed worldwide, spread among thousands. For example, in the Ethereum and Bitcoin's case, it's spread throughout millions of computers. Supposedly, if someone wanted to fabricate a single block of data on the chain, in that case, they have and need to manipulate all the blocks from their starting point in history and need to update all the computers holding copies of the blockchain ledger. That idea is hypothetically possible, but the amount of power and money needed to do it successfully should also be considered. Thus, it's virtually impossible. Third, cryptocurrency transactions are mostly confidential. With regards to traditional currencies issued by governments, which is currently prevailing in today's generation, such as in the national central banks, in here you can privately transact or pay something in person using physical cash. But in the crypto system, it's different. The transaction between two people or companies is depending on well-designed math and occurs mostly anonymously. Comparatively, in stock markets, the ledger or list of transactions is publicly viewable worldwide, while in cryptocurrencies, the parties exchanging transactions are more private. They're making cryptocurrencies defined as transactions held electronically in digital wallets. The owner would be the only holder of the private key to the wallet, making it inaccessible to anyone. Since cryptocurrencies are intended to be anonymous, some individuals might use advanced forensics to uncover wallet holders' identities. Some crypto projects like Monero, a project about cryptocurrency identified as having a high degree of anonymity, make their system resistant to identity discovery to address that problem. A few companies like Titan Bitcoin offer premium quality physical coins with cryptocurrency addresses and verifiable values stored on the blockchain. Thus, enthusiasts and coin collectors become fond of it, and it became an exciting concept for them, collecting it. Because of that, we could infer that slowly it brings a bit of digital cryptocurrency into the real world. Lastly, cryptocurrency security grows through time and value. Earlier, we already discussed how it's impossible to hack or fabricate a crypto system. It would require an enormous amount of power and money to the point that it would essentially become a worthless endeavor. To elaborate, and able for a hacker to do that, they would need to control over 50% of the computers connected to the chains that make up the consensus network. The consensus network is defined as all the computers that receive copies of the blockchain or distributed ledger. In more established crypto like Bitcoin or Ethereum, the cryptocurrency networks are so big that initiating hacking is mostly impossible. Suppose we're going to trace the early days of cryptocurrency during those times. We could observe that it's easier to gain the majority of control of blockchain as the cryptocurrency network itself was much smaller compared to this time. So, note that if you're gonna invest in cryptocurrencies, the newer it is and the smaller the network size is, the more it gets vulnerable to hacking. What if the technology underlying cryptocurrency would definitely change our lives in the future? What if crypto would be the future's next currency? What would happen to the stock market as cryptocurrencies have been growing at an exponential pace? Let me know your thoughts in the comment section down below. Before leaving, don't forget to like, subscribe, and hit the bell button for notifications on our future content. With that being said, see you in the next one.